Hello and a very warm welcome. This is Earnings Edge and I'm Vikram Oza here on NDTV Profit. We are decoding Interglobe Aviation's numbers. The parent of Indigo has posted a strong second quarter performance even as forex losses have pushed it into the red. So we are seeing revenues which have gone up. They've risen 9% at 18,555 crores. And that's largely driven by higher ticket prices, and yields over there have gone up 3% to 4 rupees and 69 paise. But a foreign exchange loss of 2,892 crore rupees, which is largely non-cash, has led to this net loss of 2,582 crore rupees compared to what they reported last year, which was 989 crores. So yes, on the brighter side, Indigo's cash reserves, they have risen 11% quarter on quarter at 38,517 crores, while the fleet size has inched up to 417 aircraft, which of course highlights a solid operational footing despite the currency headwinds. But let's talk more about the company's second quarter performance, and for that we're joined by the CEO of Indigo, Pieter Elbers is with us. Great to have you and get a sense of the second quarter numbers. Mr. Elbers, given that yields have held up quite well in the second quarter, you tell us how are they shaping up in the third quarter?
We're actually quite pleased with the revenue performance in the second quarter. The second quarter obviously is traditionally a weaker quarter. The seasonal dynamics help into that. And yet, despite that seasonally weaker quarter, we have performed a plus 10% in terms of revenue to a total of 196 billion rupees. So 10% growth top line clearly helping us. We have seen actually this year a little difficult start of the year in the first quarter due to some external factors. We saw some stabilization in the second quarter, and actually towards the end of the second quarter an improvement, and that's what we see reflected in the yields. And clearly the third quarter started off actually quite well, with Diwali this year being in October as compared to last year when it was in November.
So when you look at the guidance, Indigo is guiding for high teens capacity growth in the third and fourth quarters. So along with this upward revision to the full year outlook, something that the markets are likely to cheer on Thursday. But tell us how the forward bookings are looking. Are they really that strong? Because October air traffic growth was just about 3%. So are you expecting a sharp pickup for the rest of the third quarter?
I think the underlying dynamics for India in terms of GDP growth, in terms of the fact that many of the markets are still underserved. If we look to the number of seats per capita, India is still much lower than other parts of the world. So the opportunity in terms of growth is still very much there. That's on the domestic side. It's perhaps even more so on the international side. So that kind of fuels our ambitions going forward. We have indeed solidified our fleet position. We had a lot of new planes entering into the fleet, and that allows us to slightly nudge up our capacity guidance for the full year. And indeed, after the first two quarters where we had some moderate growth and stability, partly also by external factors, there was some runway maintenance at Delhi Airport. We're actually quite bullish on the third quarter and the fourth quarter when it comes to our capacity guidance.
So you're talking about high capacity, Mr. Elbers, but your peers are also adding all that high capacity. Is that not going to impact your yields or perhaps increase the competitive intensity in your sector?
Well, competitors are making their own decisions. I think what is driving our network is an unparalleled network and an unparalleled footprint. Today we fly to 94 destinations in the nation itself, a little short of 500 routes. We have expanded very significantly international, and we continue to do so. And if we see the market share of Indian operators in the international space, that is still lower than that of the foreign operators. So the opportunity for us actually not only to benefit from the growth of the market, but also to take some of the share of some of the foreign operators into India. I think that opportunity for us makes us confident that that capacity growth will be there, and then the others do what they do. But I believe that we have a customer proposition and cost leadership allowing us to be competitive in that space.
Sure, but what about forex losses, Mr. Elbers? In the last 4 quarters, your forex losses have been more than 4,000 crore rupees. Yes, indeed, we understand that Indigo is building a natural hedge by adding more international flights, but that doesn't seem to have worked through in the second quarter, at least, if you look at the numbers. So anything else that the company is planning to do to mitigate such forex losses?
Well, thank you for that question, because when you said it doesn't have come through, it has actually helped us a lot. But there's two dimensions on the Forex. One is the sort of operational performance in the quarter itself, where We have to deal with higher cost of spending for dollar-denominated cost when it comes to maintenance or fuel or other costs which are driven by the dollar. There we have introduced hedging in terms of currency hedging, and we have a larger portion of our revenues coming from non-rupee countries in euro or dollar or other currency. So that actually has helped us and is part of the drivers in the operational improvement. Where we have to deal with is the non-cash future obligations which we have in terms of dollar spending, and that number of course is growing given the growing size of the fleet and with the depreciation, which was quite significant in the last quarter. Indeed, that is a reflection, but it's non-cash, and it basically takes into account the future obligations. So I would say the strategy which we have done has helped us in the quarter itself. Clearly going forward, we still have a lot of obligations in dollars. Part of that actually we're also addressing now by more financial leases through the Gift City here in India itself.
So you're saying you're building on your strategy as far as Forex is concerned, but tell us about the other cost items, Mr. Elbers. Something that might worry you right now. You guided early single-digit cost growth for FY26.
Yeah, I think there's a lot of cost, and especially on a global scale, we see with the shortage of supply chain that some of the maintenance costs, for example, of bringing fleet to outside India are rising. That's exactly why we have taken a strategic decision to start building our own MRO facility, our own maintenance facility here in India itself. We have two hangars today, one in Delhi, the other one in Bangalore, and we have acquired a significant piece of land in Bangalore to start building our own facility. We're going to invest a whole lot of money to build our facility there, and that should help us both from a cost basis as well as to have more influence on the MRO part of our business.
So I'm seeing international growth. It seems to be the clear focus area right now, but what percentage of your incremental capacities is going to be deployed on the international market, Mr. Elbers?
Yeah, the backbone of Indigo remains an incredible strong domestic network, and I was sharing earlier 94 domestic destinations. 90% of the Indian population lives within 100 kilometers of an Indigo served airport. So that remains the very core of who we are and what we do. Having said that, the international opportunity with the growing Indian spending on flying international and the huge Indian diaspora, I think the opportunity is there. So today we have around 30% of our available seat kilometers is international. That percentage will go up in the years to come to about 40%. We have seen in the second quarter, for example, a very significant portion, vast majority of that growth was international. On an annual basis, the international growth will be significantly larger than the domestic. But given the size we have domestic, if you grow 8-9% domestic on that very significant 70% of the ASKs, that is still in absolute terms larger than what we grow on the international side.
So while you're talking about the growth in the international business, I'm wondering how much of that agenda is going to be a push through the massive free cash balance you have. We're looking at 38,500 crore rupees, which is 46% of the last 12-month revenue. So the thumb rule generally in the aviation industry is to have 20% of revenue as cash, but it seems like you're building a war chest that perhaps you need to grab better international market share. Is that the war chest that you have built now to buy more planes rather than leasing them? How do you plan to deploy all that cash?
No, I think what we have been doing actually, first, we're coming from COVID 3 years back, and it was so good that at COVID we had that what you call war chest in terms of cash. So our first objective post-COVID was re-establish that strong cash position, because you never know what happens. That is what we have done. Now we start to invest that cash, and we invest in cash in multiple different elements. One is we start to invest it directly into fleet and directly in supporting materials and engines. We're also investing it in the MRO facility, which is a huge investment. We are also investing it in digital. So we're actually using now the cash to start prepare for the future of the company. So objective number one was make sure that we have enough war chest in case something unexpected happens. We have done that. We now start to look at proper allocation in order to secure the future, reduce costs for the future, and basically prepare some of the infrastructure needed for that.
And talk about the future, now that Indigo has started these direct flights between India and China, tell us about the early response you've had so far.
Well, it's actually started last Sunday, so it's less than a week. We're into operation, or it's about a week. We're into operation now. We reinstated the flights between Kolkata and Guangzhou. We're gonna launch next week on November 10th. We'll start for the first time flying from Delhi into Guangzhou as well. First response is positive. You know, we always see a bit of startup, and then people need to get visas and preparation, and after a hiatus of 5 years, clearly it's something to restart it. But obviously, we're very excited about it, and the fact that the two governments have agreed that flight resumptions were possible, and Indigo is the first one to step in. It just underlines our belief that between the two most populous nations on planet Earth, to have direct flights from India into mainland China is a great opportunity. And here, similar to other parts of the world, I believe that our strong cost position will really enable us to benefit from that. And the fact that we have our narrow body aircraft ready to start these operations is underlining that.
Also, Mr. Elbers, before I let you go, the DGCA is proposing passenger-centric changes to the refund rules for airlines, like this 48-hour free cancellation, which would apply to all scheduled and non-scheduled domestic operators. Tell us, from Indigo's point of view, are you in support of these changes? And tell us about the likely impact of this.
Yeah, well, I think that came out only today, so we're still evaluating what is the exact consequence and how would it exactly look, and what is the key differentiator compared to what we have today. So it's perhaps a bit premature to react now. I think in general, we are in favor of finding the right balance between having consumer interest, and at the same time we should look at the the sustainability of the aviation landscape in India. And India already is an incredible competitive market, and I think we have seen over perhaps the 2 decades how difficult it is for operators to operate in such competitive environments. And with all the ambitions we're having collectively to make India into a global aviation hub, we should find that right balance between those consumer elements on the one hand side and sustainability of the industry, and the sort of continuity of the industry on the other hand side. And that's exactly what we'll include in our evaluation of this news which came out today.
Yes, indeed. The news came out today, and of course this has bearings on the consumer aspect. But I'm not going to let you go before you have a word for shareholders, Mr. Elbers. What should they expect now? Should they expect higher dividends from you, or a buyback even?
We had a dividend being announced with our results last time. That was for the first time after some years, clearly after COVID. I think it was an incredible achievement, where first we moved the company back into positive net worth. Then we had a dividend payment at that point in time, which was approved by the shareholders meeting in August. We continue to build the company for the long term, and I don't think it would be very appropriate to speculate on any future elements like that. We're building the company for the long term. We're actually very happy that we had that dividend payment being done, and I think I'll leave it with that.
Fair enough, Mr. Elbers. We wish you great luck for the quarters to come. Of course, we'll check in with you with every quarterly report card, but thank you for speaking to us on NDTV Profit.